Good morning, ladies and gentlemen. Welcome to the Applied DNA Sciences Quarterly Earnings Call and Webcast. This call is being recorded. At this time, I would like to turn the call over to Debbie Bailey, Director of Investor Relations. Please go ahead.
Thank you. Good morning, and thank you all for joining us today. We apologize for the slight delay. We were just waiting for some people to call in, sign on. My name is Debbie Bailey, and I'm the Director of Investor Relations. On today's call, we will be hearing first from Beth Jantzen, Chief Financial Officer for the company, and then from Dr. James Hayward, our CEO and President, after which they will together answer questions from our shareholders and analysts. Please note that some of the information you will hear today during our discussion may consist of forward-looking statements, including without limitation those regarding revenue, gross margin, operating expenses, other income and expense, stock-based compensation expense, taxes, earnings per share, and future products. Actual results or trends could differ materially. For more information, please refer to the risk factors discussed in Applied DNA Sciences Form 10-K for fiscal 2014. Applied DNA Sciences assumes no obligation to update any forward-looking statements or information. At this time, I would like to turn the call over to Beth Jantzen.
Thank you, Debbie. Good morning, everyone, and thank you for joining us today. Let me take you through our financial results for the quarter. Revenues for the third quarter of fiscal 2015 were a record $2.3 million, an increase of 170% compared with $841,000 reported in the third quarter of fiscal 2014, and a 49% increase compared to the second quarter of fiscal 2015, which ended March 31st. For the first 9 months of this fiscal year, we reported revenues of over $5 million, which represents an increase of 142% from the same period last year. I would like to emphasize that year-to-date revenues exceed our fiscal year revenues for any prior year in the company's history. In fact, our revenues for the first 9 months of this fiscal year already represent an 85% increase over our revenues from the full fiscal year last year. The increase in revenues for this fiscal quarter, as well as the first 9 months, were primarily the result of an increase in revenues from sales in the textile industry for protecting cotton supply chains, as well as from our 2 government contracts. This is an exciting time for the company. We believe that the increase in revenue represents an inflection point, the beginning of conversion of our pilot projects to commercialized programs, which we referenced last quarter and which Jim will speak about in more detail in a few minutes. Operating expenses were $3.9 million for the 3-month period ended June 30th, 2015, an increase of $612,000 or 18% compared with $3.3 million for the same period in the prior fiscal year. This increase is attributable to an increase in non-cash stock-based compensation expense, primarily associated with stock option modifications, offset by a decrease in legal fees as a result of the dismissal of the Smartwater litigation. On a sequential basis, total operating expenses increased 16%, or approximately $500,000, from $3.4 million for the second fiscal quarter of 2015. This increase is primarily associated with non-cash stock option modification expense resulting from the extension of certain stock options during the fiscal third quarter. For the first 9 months of fiscal 2015, operating expenses increased slightly, due mainly to an increase in non-cash stock-based compensation expense of approximately $610,000, which primarily was associated with grants to employees that vested immediately and have a 10-year term, as well as related to stock option modifications. This increase was also offset by decreases in our legal expenses. As a result of higher revenue and lower cash operating expenses for the third fiscal quarter and the first 9 months of the fiscal year, we have substantially narrowed our adjusted EBITDA loss. For the third fiscal quarter, adjusted EBITDA was a negative $480,000, an improvement of approximately $1.4 million compared to a negative $1.9 million for the same quarter last year, and an improvement of a little over $700,000 compared to a negative $1.2 million for the second quarter of this fiscal year. On a year-to-date basis, adjusted EBITDA was a negative $3.4 million, an improvement of $3.5 million compared to a negative $6.9 million for the same period last year. Now turning to the balance sheet. We have continued to maintain strict control over our expenses and cash flow, which in addition to our revenue growth, is succeeding in lowering our monthly cash burn rate. As of June 30th, 2015, our average monthly cash burn rate for the first 9 months of this fiscal year was approximately $620,000, which compared to approximately $720,000 for the same period in the prior fiscal year. As of July 31st, 2015, our cash balance was approximately $10 million. The cost savings plan implemented earlier this fiscal year, which was designed to reduce our expenditures and cash burn, continues to be an important part of our financial planning and budgeting process. We are closely monitoring our spending and our business plan to ensure that we have the capacity and expertise to meet our most immediate market needs, as well as being prepared for the needs of our customers in the near future. So that means that we are doing some strategic hiring and beginning to incur other costs to support our growth, while continuing to be mindful of our expenses relative to our revenues and cash balance. We will continue to watch our expenses, looking to strategically manage costs in line with our current and near future market opportunities. In summary, this has been another exciting and positive quarter for Applied DNA Sciences, as we are starting to see our pilot studies and early commercial projects turn into large-scale commercial contracts. We continue to closely manage our expenses, as well as strategically manage the business for the benefit of all of our shareholders. Thank you for your attention, and I would now like to turn it over to Jim for his comments.
Well, thank you, Beth. Good morning, everyone, and thank you for joining us today. I'm pleased that we were able to report strong results today. Revenue growth over the past 5 quarters has averaged approximately 35%. In comparison, the last 3 quarters have averaged approximately 55%. But we are just beginning to tap the enormous opportunity for our DNA-based authentication platforms. Now, we have the resources to grow the business in a disciplined, structured way, with less emphasis on opportunism. This is what we are doing and what I want to talk with you about today. We are a technology company with solutions and products directly applicable to a very broad range of end markets. While we're very excited about the profusion of opportunities we'll be cultivating, our immediate go-to-market strategy requires that we narrow our aperture to earmark resources in the near term to the highest return opportunities, and that we refine our strategies for penetrating each vertical market. But we cannot lose our capacity for thinking big. Our technology demands it. But short-term growth comes from compiling immediate successes. And as a strategy, these include, firstly, successfully completing our steady supply of pilots. It is a reflection of our perceived value that many of our customers now fund these pilots, yielding significant revenue even in the pilot phase. Secondly, we're developing anchor customers that can pull our platforms and expertise through their supply chain. The result is that the anchor partners also take up our technology and become customers themselves. Thirdly, we must transition from pilot to full commercial deployments. Our experience, however, is that successful pilots usually lead quite smoothly to commercial relationships. The benefit of this repeatable, or clonable, if you'll pardon the pun, go-to-market approach is that we cost-efficiently broaden awareness for our brands and value proposition, cost-efficiently scale the top line, and reduce our time to market. In multi-party supply chains, the benefit is amplified by uptake of our platform at all the nodes in the supply chain, with the potential for multiple multi-year relationships. We believe that because the impact of our platform on purifying supply chains is so beneficial, our technology will prove to be quite sticky, leading to long-term sustainable relationships. Now, as you have seen from our revenues for the quarter, we're starting to see reliable results. Our revenues this quarter came primarily from two market verticals. $1.2 million came from sales in the textiles industry for protecting cotton supply chains, while $658,000 came from government contracts. Until now, the driver of the transformative growth we have seen over the past several quarters has been primarily our government and military vertical. To put this into context, this vertical generated approximately $1.5 million in revenue in fiscal 2014, the majority of which consisted of DNA marking a single federal supply class, known as 5962, or semiconductors, which are at the highest risk of being counterfeited, for the Defense Logistics Agency. In fiscal 2015, we anticipate over $3.4 million in revenue from this vertical across 4 government agencies. Although still very much early days, I think this shows clearly just how quickly initial traction in a specific vertical can impact revenue in a very substantial manner. Our government contracts require that we demonstrate the ability to scale up to be able to address high volumes of DNA marking for multiple items. For the RIF contract, the Office of the Secretary of Defense has asked that we show the ability to mark up to 146 million items across 6 federal supply groups containing a total of 66 federal supply classes with total sales to DoD of nearly $22 billion. We're forming these relationships now and beginning to work with some of the contractors who supply these items to the government. It is important to remember that all of these companies that supply the government also have commercial customers, and typically these commercial customers account for a far larger percentage of their business than the military business. Our expectation is that once we have developed relationships with these organizations, not only will they want to mark product being sold to the government, but they will also want to mark many of their products being sold to their commercial customers. The textile story has unfolded as the model of our supply chain business. Within textiles, our closest opportunity is in cotton, although we are actively developing DNA marking of wool and synthetic fibers as well. We have partnered with Louis Dreyfus Commodities, the merchant who buys and manages the logistics of our DNA-marked cotton, and Divatex, the manufacturer who produces finished goods and helps us to sell to brands and retailers. Our trademarked Pima DNA content brand, called PimaCot, symbolizes DNA-marked Pima cotton, and for the first time offers Pima, or extra-long staple cotton, that can be verified from farm to customer. Our initial pilot, championed by Divatex and their customer, who happens to be one of America's largest retailers, was an unqualified success. Our fiber typing assays at the gin in California ensured that only Pima cotton entered our feedstock. Our partners at Divatex have likened the process to diagnosis with fiber typing and then treatment of the supply chain with Signature T, which is more readily detected as the fibers work their way through the supply chain. Once our Signature T mark was applied in the gin, it could be detected in every stage of manufacturing, right through to the finished product. Now, I can't emphasize this enough. This is really an historic development, resulting from visionary partners and courageous retailers who want to assure their consumer customers that their supply chain is pure and tightly controlled. The commercial product from this pilot will be landing on their shelves this fall, bearing our PimaCot trademark on both the label and the package. Now, people in the know claim that the product quality of this purified supply chain is the best they ever have seen. Working with our partners, we have already lined up our next customers and secured demand for over 30 million pounds of DNA-marked Pima cotton for the upcoming ginning season, which begins shortly in September. We believe that incremental orders will come in from additional brand owners and additional retailers as the ginning season begins. Revenue from this business comes in different ways, both one-time and recurring. We supply DNA and its application systems at the ginning site. We provide quality authentication services both from our Stony Brook lab and from our on-site machines for each of the supply chain businesses. We utilize our digital DNA software platform for internal and customer-facing operational transactions, and we earn a share of raw cotton sales. Licensing our on-site DNA authentication technology to provide real-time testing of cotton fiber and greige goods yields an end-to-end supply chain solution to guarantee quality and support product claims. Licenses will be offered to supply chain members at every node at which the DNA-marked cotton changes hands. In addition to marking Pima cotton, along with our partners, we're undertaking the marking of Upland cotton with the launch of our homegrown trademark. Upland cotton, proudly grown in the USA. American-grown Upland cotton fibers will be tagged at the source and verified from grower to consumer. Upland cotton accounts for at least 95% of cotton grown in the U.S. each year, and there has been significant interest from large brands and retailers in this application as well. We believe an initial order for the marking of Upland cotton could come in the fourth quarter. This would also create demand for additional gin DNA transfer systems. So to sum up, we have groundbreaking technology, multiple revenue streams, and a replicable model that we plan to implement in other textile markets over the next few years. In home asset marking, we are focused on securing anchor customers in the insurance industry or large channel partners that can distribute our products to a broad customer base. At the same time, we're building interest through a variety of grassroots campaigns. In total, we have now provided DNA kits in multiple countries, multiple states and municipalities to insurance companies and multiple industries, including hospitals and pharmacies. We have marked almost 1 million private items in people's homes. Our initial success has been in Europe. In Sweden, which is our most developed market, DNA marking was approved as a national forensic standard by law enforcement and has been trained throughout the country. Thousands of homeowners are now using our DNA Net product, protecting their property. Interest spread to automobile dealers who have now marked over 5,000 vehicles. A large hospital has marked over 6,000 IT assets, and an insurance company has initiated a promotional mailing to its 350,000 Stockholm customers. We're also seeing this product gain traction in other countries with an increasing list of distributors, including the Caribbean, France, Belgium, and Denmark. We see this pattern repeating now in the United States. We've trained police in over 30 counties and 38 police departments to date, and a 500-home deployment is underway on Long Island. We have Sting kits in use in county and federal agencies, and early discussions are underway with insurance and security companies for broader distribution. The enthusiasm has been palpable everywhere we go. Our ultimate goal, of course, is to train police forces throughout the country to get buy-in at the local level by law enforcement, to complement the promotional efforts of channel partners, and to make this product as successful as we know it can be. Now, plastics represent another process industry with leaky supply chains that we believe follows the same model as our textile business. Source marking of extruded polyester fibers for use in garments has now been proven with an industrial partner. Together, we are actively recruiting customers for commercial deployment. Source marking has also been proven in polyolefins in our work with Borealis. We are working together to recruit customers to pull the product through to finished product stage, the same model that is in place for cotton. This has been going a little slower than we'd hoped, but we're still very excited about this opportunity and hope to have more news for you by the next quarterly earnings webcast. And we have other early opportunities in plastic, where we have just successfully completed a factory pilot study. What is significant for you to know is that as a result of our experience with our two earlier customers, we have been able to shorten the time from idea to pilot to just several months. Another market vertical which I've not spoken much about in the past is the print and packaging market vertical. Here we have created a certified partner program for print and packaging equipment and services companies as an indirect sales channel. Our already 7 partners, whose inks and varnishes have undergone extensive evaluation and formulation with our DNA, have primed the pump in the industries including pharmaceutics, cosmetics, wine, and other consumer packaged goods. We are pleased to be participating in pharmaceutical labeling evaluations with 2 partners in our pipeline. And finally, in cybersecurity. It is one of the most critical issues facing our nation and each of us. The threat of our personal information being stolen, not to mention the threat of cyber warfare. And this problem is only going to get bigger. We at Applied DNA Sciences have been sowing the seeds of protection against these attacks for many years, as protection against the physical pieces of IT infrastructure. Working with both federal agencies and more recently with commercial computer hardware companies, we have active pilot studies in place to be part of the solution to this growing scourge. Because of the sensitivity of the work, however, we are limited in what we can share, but I hope to be able to tell you more in the coming quarters. And with that, I would like to open this up for questions from the audience.
Thank you very much. For the members of our telephone audience, if you would like to ask a question today, you can do so by pressing star 1 on your telephone keypad. If you are using a speakerphone, please ensure that your mute function is off so we can receive your signal. Once again, that is star 1 for a phone question. Our first question today will come from Brian Kinstlinger, Maxim Group.
Hi, good morning, guys. How are you?
Good, thank you. How are you?
Great. So I was just hoping you had mentioned, and it was helpful to know that you had $1.2 million of sales for cotton orders of Pimacot. Could you tell us how much cotton was ordered that generated that amount of revenue?
Sure. That was approximately 30 million pounds of cotton generated that revenue.
And was that all from one large retailer, or did LDC provide any revenue as well?
No, that was a consolidated order from multiple brands and retailers.
Okay. And if we use that, well, actually, let me start with, I realize you get paid in many different ways from Pimacot. However, I'm curious if we use that sort of ratio of 1.2 million to 30 pounds, is that what we should think about long term? Is that a discount as you're offering initial sales kind of more cheaply so you can gain adoption? How should we think about that?
Sure. The nature of our relationship is that we apply a slight discount as the volumes increase with particular customers, so that price could go down a small amount. We expect the volume to increase annually, at least over the next foreseeable years, I'd say 2 to 3 years. And we also expect that business will grow beyond the United States as well.
Now, I assume that large retailer buys substantially more than 30 million pounds of cotton. So I guess, how do you think about the long-term potential of a large retailer like this? Say 2 to 3 years from now, could that be a $10 to $20 million customer by itself, or is that way too much in terms of what they order?
I think it would be difficult for us to provide the kind of guidance that would go out 2 or 3 years based on particular retailers' needs. You know, the first thing we have to do is demonstrate that the impact of purifying their supply chain has impacted their product. And it seems as though that has already happened, that the product is cleaner, better, has a better hand, and likely to last longer, retain dyes longer as well. As that happens, we expect the orders to increase. But remember, because we have eliminated, the cheating that takes place in this industry, we've also eliminated the savings that some of the cheaters can offer to the supply chain. And so it will result, I'm sure, in a slight price increase to get what you pay for. And so I think we'll have to see how the market equilibrates in order for us to understand exactly where we end.
Great. One more on the cotton side. I'm curious how some of those other retailers, how the relationships were established. Was that Divitex? Was that direct sales? Did they hear about you through their suppliers that were already adopting your technology? That would be helpful. Thanks.
Sure. Well, we have been evident in this arena for the last year or two. So there are a number of brands who already know us quite well, and retailers. But in our relationship, Divitex is actually acting as our sales channel. And so it's a very convenient relationship. They're very, very close. Their business brings them to interface with those users in the market directly. So for us, it's a very efficient use of the skill sets of each of the players in the trilogy of partners who are its work.
Great. And then a few more. First of all, on the chip side, you had mentioned obviously the commercial market's much larger. I'm curious, have those discussions began with suppliers, and how far before you might receive a commercial pilot for some of that DNA marking for chips?
Yes, those conversations are underway. Difficult for me to predict exactly when the business will spill over, but if you stop to think about it, the chips that are often used to help fly fighter jets are the same chips used currently in commercial aircraft. And if we demonstrate that we have a tangible benefit in the military market, it seems to me it won't be long before that technology spills over to related commercial markets, that is, commercial aircraft. But for that matter, we see it also spreading to medical devices and to automobiles. There have been recent demonstrations in the press of back doors available in chips in automobiles that I think should be giving us all a little pause and reasons to authenticate the semiconductor supply chain to both automobiles, cars, and of course to commercial aircraft.
Great. And then finally, is it too early for you to think about M&A? Are you thinking about M&A? And if so, what would you be looking for in terms of enhancing your products?
Sure. I'd say it's never too early for a company to think about M&A. The question is, what do you do about M&A? And it's essential for any company such as ours who are just commercializing their organically grown product to remain as focused as possible on serving their organic business before they're potentially distracted into other areas. Now, when the M&A helps with the development of the organic business, especially for a company at our stage of our growth, that's a perfect combination. But we have to be cautious of our cash reserves. We have to be cautious of the rate of growth of our revenue. We have to be cautious of our market cap. And we keep all of that in mind as we consider our opportunities. But we never stop thinking.
Great. Great to see the revenue starting to ramp even more than it has in the past. Talk to you soon.
Thank you very much. It comes from a great team.
Our next question will come from Jay Rogers with Jay Rogers Investments. Jay Rogers, your line is open. Please go ahead. And if you're on...
Can you hear me now?
Go ahead.
Yes, I can hear you.
Okay. The $980,000 I think I saw on one of the slides earlier, bad debt expense, is that something that we should see again, or what was that?
That actually was not bad debt expense. It was loss on the conversion of promissory notes. When we originally had the promissory notes, they were converted to stock and warrants as part of the financing in November of 2014. It was basically a non-cash charge, essentially an accounting entry. Our bad debt for the 9 months was approximately $22,000.
Wonderful. So that's all behind us.
Correct.
Thank you.
You're welcome.
And I understand our hosts are going to have a question at this time.
Yes, we have a question from Dan Wald, an analyst at Benchmark. He asked, the Pima cotton crop has been badly hurt in California due to the drought. What is the effect on Applied DNA Sciences?
Yeah, the drought is likely to obviously decrease the yield of extra long staple or Pima cotton, and as a consequence, demand will increase the price of Pima cotton in the face of the diminished supply caused by the drought. It's likely that the increased prices will hurt the margins of the entire supply chain. Now, keep in mind, this is a supply chain that has been prone to substitution of cheaper product for the Pima or extra long staple brand. So my suspicion is that the demand for Pimacot or for DNA marked extra long staple cotton would actually increase in this scenario to limit the likely increase in cheating that takes place from limited supply.
And at this time, we will turn the conference back over to Mr. James Hayward for any closing or additional comments.
Okay, well, that will be the end of our Q&A, and we're really very grateful for your participation today and for your support of Applied DNA. Together, we will make life real and safe. Thank you very much.
And that does conclude today's conference call. Thank you for your participation. And that does conclude today's conference call. Thank you for your participation.